is almost 2025, and you're probably seeing a bunch of videos about top stocks to buy in 2025. But before you hit that buy button, hear me out. These people aren't licensed advisors, and they're probably just repeating things that they heard other non-advisors say. I'm a former financial advisor, licensed Series 7 and 66. I left corporate America to do YouTube so I can give this information to a broader range of people. In my career, I was only able to work with people who had over $500,000 to invest, but with the power of YouTube, I'm able to reach everyday folks like you and myself. So by doing this, I am able to give you real financial knowledge without all the corporate agendas and the corporate fluff. Trust me, working with me in the past would have cost you tens of thousands of dollars. So now I'm giving you this information for free. That's the real deal. This is the best way to build wealth and to get rich in 2025 without depending on luck. If you're like me, then you're probably not lucky. I have the worst luck in the world, I trip out the bed every single day. I've never won anything in my life by luck. Everything I got came from hard back-breaking work. So if you're like me, then you will definitely find value in this video. Time is money, so let's jump into it. First, this is just the smartest and takes on the least amount of risk depending on which portfolio you use. A lot of people think in order to make money in the market, you need to take huge risks and bet on these penny stocks that 9 times out of 10 just lose you money. But today, I'm going to go over 3 risk tolerance. So the first portfolio we're going to talk about is conservative. Second would be moderate. And third would be aggressive. So now if you're a newcomer and you are new to investing and don't know what these terms mean, let me break it down for you. Conservative is basically you tell me, hey, Elijah, I do not want to lose any money at all. I only want to make money in the market. I don't want to lose. And I am okay with not making a lot of money by prioritizing safety over gains. That is a conservative portfolio. This portfolio is for people who have a shorter time horizon. Let's say if you were trying to buy something within a year, then you can't afford to take risks with that money because you're going to need it very soon. Moderate. Moderate is when you want to take a little risk, but also want to be safe. You're in the middle. So basically you tell me, hey, I want some safety, but also want to capitalize on market growth. That would be a moderate portfolio. Time horizon would be around 2 to 5 years. Last but not least, my personal favorite for people my age and a little bit older is aggressive. The aggressive portfolio is basically an allocation of about 90% stocks, 10% bonds. This portfolio is for people who want to capitalize on market growth, and they do not care about market downturn. So they're okay with losing money because they want to make as much money as possible in the market. In my honest opinion, I think most people who have a longer time horizon should take the aggressive approach because you're not going to touch that money for 10 years. And historically, the market has returned 10% a year. Again, so past data isn't any indication of future data, but 9 times out of 10, 10 times out of 10, there's a 99% chance that you will make money in the market if you leave your money in a portfolio, obviously a good portfolio for 10 years plus. So I also included timestamps in this video. So if you just want to jump into the aggressive portfolio or the moderate portfolio, or you're just looking for the conservative portfolio, you can jump around into the video and find exactly what you're looking for. And the power of a good portfolio, I've seen it, put kids through school, buying first houses, when people pass away, making sure that your family is taken care of. These things are the utmost important. And investing has been the way to achieve these things. So we're going to talk about ETFs. ETFs are exchange traded funds. So this is a little bit different than buying individual stocks. This helps you diversify. Diversification is probably the most important thing when it comes to investing. Because if you have all your money in tech stocks and tech stocks take a plunge, then what? But if you have a little bit of tech, a little healthcare, commodities, whatever. Now, if you look at this chart, you can see the history of the performance of the S&P right here. So just to recap, these portfolios are a great structured way for you to grow your wealth without having to invest only in individual stocks like the fake gurus on YouTube tell you to do. Now, when it comes to risk tolerance, that is completely up to you. If you're new to investing, I would recommend a more balanced or conservative portfolio. But if you're experienced, then I think you should roll the dice and choose the aggressive portfolio because it could be a game changer for you. This isn't necessary financial advice. These are just examples of well-rounded portfolios that you can use and copy. So this is it for today's video. Don't forget to smash that like button, comment, and ask questions. I reply to every comment, and I will see you in the next video. Let's make 2025 the year that you take control of your finances and stop sitting on the sidelines and take action. I'm Elijah, King of Finance, New Jersey. Catch you later.